I would like to present the moderator, Anthony Vaccaro, who is the group publisher for the Northern Miner Group. As group publisher of the Northern Miner Group, Anthony Vaccaro has overall responsibility for some of the mining industry's most distinguished media brands, including the Northern Miner, Canadian Mining Journal, and Mines Handbook. Previously a staff reporter for the Northern Miner, where he traveled the globe to cover mining and exploration projects, Anthony also holds the CFA designation, has an MBA in investment management, and is a board member of the Canadian Mining Hall of Fame. Anthony?
Okay. Right off the bat, Ron's just reminding me to thank you, big thank you to Deloitte for the sponsors, for the sponsorship of this event, and thank you all for being here. I know it's Tuesday, it's 3:30. Everyone could have just kind of bailed, but you're here, so let's give them a bit of a show, gentlemen, shall we? We've got a good topic here. We have room for a good, lively debate. Brings out a lot of emotion. And right off the top, I want to, before I even introduce them, but Josh and Michael get like full top marks for coming into the Lion's Den here, right? They're a bit on enemy's turf, but we promise not to go easy on you, but also at the same time, commend you for being here, and we'll give everyone a fair listen, that's for sure.
I'm even wearing a tie. Not many crypto guys wear a tie.
I know, that's very, it's very untechy of you. But Michael looks a little more
I'm wearing a suit.
It's one or the other usually, right? No hoodies, so that's good. Thank you for dressing for the occasion. All right, let's start with a few introductions here so everyone knows who everybody is. To my right, we have Michael Gokturk. He's the CEO of Einstein Exchange. Michael's a fintech entrepreneur, and he was the founder of VersaPay and PayFirma. VersaPay went public on the TSX in 2010, and PayFirma was recently acquired. So Michael founded Einstein after selling PayFirma in an effort to create a simple way for Canadian investors to get into the emerging digital currency market. Welcome, Michael.
Thank you.
To Michael's right, we have Josh Crum. He's a co-founder and chief strategy officer for Gold Money. So Josh, he served as chief strategy officer and director it was formerly BitGold. Some of you might know BitGold. The Northern Miner ran a lot of stories on BitGold when it first got going. So that is what we're talking about with Gold Money. Let's look a little bit more into your past. You're the founder of Block Vault, a Gold Money subsidiary, and that offers digital asset custody and dealing services to financial institutions. And Josh was previously an executive director at Goldman Sachs. He's the senior metals strategist in the Global Economics Commodity and Strategy Research Division. So certainly someone, and also spent some time with Lundin Group of companies, I should mention as well. So someone that kind of sits a little bit in both worlds. So welcome, Josh. To Josh's right, we have Rick Rule. Rick is president and CEO of Sprott US Holdings, and he leads a team of earth science and finance professionals who have a worldwide reputation for resource investment management and is well known to many in the audience. Rick is a frequent speaker at industry conferences. He's been interviewed by numerous radio, television, print, and online media outlets concerning natural resource investment and industry topics, and we're certainly honored to have him here today. And sitting beside Rick, we have Jeffrey Christian. Jeffrey's the founder of the CPM. The CPM group. CPM does commodities research, consulting, advisory work. He's globally recognized as an authority on the markets for gold, silver, and platinum group metals, and he's well known for his application of economic and econometrics across commodities markets. So welcome, Jeffrey. Welcome to all of our panelists. Okay, so I thought a good way to get going here, everyone here we're going to assume has pretty good familiarity with the gold market, so we're not going to work on any definitions in that space. But it might be good just to kind of do a quick little synopsis from Michael and Josh on, I guess the one thing that I just wanted to make clear to everyone is the distinction between Bitcoin and the blockchain. Because there is a consensus that the blockchain is a very exciting moment in technology evolution. And if you guys could maybe just explain what's happening there and make that distinction, I think that would be great. Spend a couple minutes on that.
Want to do it or want me to?
Yeah, no,
okay.
all you.
Wow. Okay. Well, First of all, I used to be an IA working in the mining space, so I don't have any kind of issue with regular mining. In fact, in order to mine Bitcoin or any kind of the cryptocurrency, you need these big graphic processing units that are made of cobalt and nickel and gold, and like you need base metals to make and manufacture these equipment that is used to mine Bitcoin. So in the Bitcoin industry, it has grown very fast over the past few years. The current market cap of Bitcoin and all the other cryptocurrencies in the world is about $500 billion right now, which has grown fivefold over the past 7 months. Bitcoin itself has a market cap of, I forget, around $45, $50 billion, and it is traded just like any other commodity. So dollar, gold, oil, anything like that. It's traded regularly on multiple exchanges around the world. And like I said, I mean, there's no taking sides with Einstein because we're an exchange. We're just a marketplace for buyers and sellers to come together and buy and sell Bitcoin and other currencies. There's 1,538 different cryptocurrencies today that are either a Bitcoin derivative, Ethereum, which was created in Waterloo, by the way, by Vitalik, and multiple other 1,500 plus. And now there's other coins out there, tokens or coins, just like stocks, that either peg gold or oil. So it's just like trading a derivative. And that's currently the market right now. And what's happened is there's been a massive influx into Bitcoin and other cryptocurrencies because there's a lot of volatility. And in that volatility exists a lot of opportunity to make money. So that's what we cater to. We enable Canadian investors to come in, safely, securely buy any cryptocurrency and trade it and make money on it, which is the name of the game, actually.
Right. Thank you for that. Josh, is there anything you wanted to add?
Yeah, I think it's just, and I'm probably getting ahead of maybe some of the debate or questions. I think there's a lot of simplicity and a lot of politics when people talk about money. For some reason, it creates this emotive response, like, you know, only one can win. It can only be the U.S. dollar. It can only be gold. Gold's the only real money. You know, fiat currency's backed by nothing. You know, Bitcoin's backed by air. But like, money is always a special form of commodity. They're all forms of commodity. And I think Michael did a great job of explaining the actual what's called the proof of work. This is the blockchain process that actually gives the commodity of Bitcoin a scarcity and a value because you can't forge it. Now you can try to copy it and you can try to compete for again, another network, or compete for that hashing power that these miners are now, the Canadian capital markets have obviously been financing a lot of these crypto miners the last 4 or 5 months, and this is now becoming major infrastructure projects. So it's a commodity because it has a scarcity, it has a cost to create, and I think that's a very important thing to understand. And I would even argue, this is probably the first time you'll ever hear me argue for fiat currency in my life as well. But a fiat currency is typically created in a financial system borrowing against a real asset like real estate or gold or trade finance of oil, and so dollar's not completely created out of thin air either. So I think it's always important to sort of set the stage and get away from the religious and sort of superficial arguments and actually really think about what is the commodity value.
Okay, thank you. Josh, that's nuanced and sophisticated. I'm going to make it less sophisticated and less nuanced. I'm going to go back to the thing that we all did back when we were in grade school, and you could only make one choice. Who do you like more, your mom or your dad? You could only choose one. That kind of thing. That's what we want for the purposes.
My apologies.
For the purposes of this, what we're doing here today, we want the strongest arguments that all of our panelists can make. That if you're only making one choice with a certain amount of allocated capital, that it should be gold or it should be Bitcoin. And through that, we're going to elucidate a lot of the points on either side. So with that, I would like to start with Rick. Rick, can you please argue for the case that if I'm only making one investment, that it should be gold and not Bitcoin?
I understand at the beginning of the discussion that the argument is going to be personal. For me, it's gold. It's gold for 2 reasons, but the most important is because I understand it. And I don't understand Bitcoin. There's no place for me in Bitcoin if it's against gold. I'm in the odd position of probably rationally not being in a position where I should own gold because my life and my reputation are so leveraged to the gold price. If the gold price does well, Sprott does very well. But I own gold anyway. I own it the same way that you might own life insurance. It seems to me like it's social insurance of a sort of primary type. It's strange in that I own a lot of it, and I kind of hope the price doesn't go up, because the set of circumstances that makes the gold price go much higher changes your life and not for the better. So I'm in the odd position of owning a whole bunch and hoping it doesn't go up in price. Now, I'm attracted to Bitcoin, and don't get me wrong, I'm not going to straddle a fence. I don't own any. I'm attracted to Bitcoin because I'm a consumer of currencies. I use US dollars, Canadian dollars, New Zealand dollars, all these things. And the idea that there's a bunch of smart kids around trying to dream up new currencies that have better utility for me is a wonderful thing. Right now, the problem is that Bitcoin isn't actually a medium of exchange. It's gone up in price so fast that everybody's afraid to spend it because they're afraid that what they bought with it is going to go up. What it becomes right now is the classic trading sardine. It is a narrative that has been justified in spades by the price action. I've seen this many times with junior mining stocks. People are more attracted to them at $2 than they were at 20 cents when they are arithmetically 10 times less attractive. The success in the immediate past has caused people to justify the narrative at the same time that the value proposition is diminished. I am not saying that there's no value proposition in Bitcoin. I am saying that if you look at the two, for the reason that I own them, the fact that gold has a 2,000-year-old history, no, I'm not that old, it is simultaneously a store of value and a medium of exchange. And most important for me personally, I understand it.
Can you send $2 million worth of gold to anyone across the world within 2 seconds?
That's a different utility.
Well, that's a transfer.
I mean, the answer to that is easy.
There's a stored value principle and there's a transfer principle in both those equations.
And can you, as an example, go to a rural village in Pakistan in a very, very, very bad situation where you have no cash and have no social trust and live for a week on your ring, like a ring with Bitcoin? You can't do it. You own them for different reasons.
You don't
You're
know
suggesting,
that. Maybe that gentleman in Pakistan has a Bitcoin account.
Maybe. That's a wonderful phrase, maybe.
Well, I'll tell you a story.
Wait. I'm going to jump in here.
The beautiful thing about gold is that long before you were born,
you're assuming that the other person accepts gold as a currency.
I've
before gold, there was
that
silver,
thesis many
there was
times.
rocks, there was sheep, there were goats. It's all about, you're assuming that there's no person on the other side that's willing to accept Bitcoin. But you'd be surprised. Even in Canadian stores, which I can't name, there are people who don't accept Bitcoin in the store as a big box retailer, but the retailer, the person that's selling it to you says, I'll take your Bitcoin, I'll buy it from you, and I'll pay the store. So all you're saying is a currency, a digital currency that is literally 4 to 5 years old, has no mechanism of transfer, and that's incorrect.
I didn't say that that had no mechanism of transfer. I said that there wasn't a historical, durable track record of it being
how can you compete with something that's 2,000 years old?
Pardon me?
How do you compete with something that's 2,000 years old?
Precisely my point. Thank you for making my point. I appreciate that. It's really nice when a young guy subsidizes an old guy.
We're not competing with gold. We are, and
Agreed.
when I say we,
Agreed.
I say the Bitcoin market itself and the cryptocurrency, not just Bitcoin itself, but the cryptocurrency, the digital currency market has tremendous utility far beyond anything I've ever seen in my 40 short years on this earth.
Okay, I want to bring Jeffrey into
realize-
this. I want to bring Jeffrey into this. Hold the thought, and we'll get it going again. But Jeffrey, we're coming back to the original point, and Michael's given you a lot of things that you can bounce off, if you so choose. Jeffrey, in your mind, you can allocate your capital to one place, Bitcoin or gold.
Oh, it's got to be gold.
And why is that?
It's got to be gold for a variety of reasons. But look, we've gotten off on the wrong foot here. There's several things that are being misdefined here. Hello? Okay. There's several things that are being misdefined here. First off, a currency per se, whether it's a cryptocurrency, currency, or gold, or silver, is not an investment per se. So it's a little bit of a misnomer to talk about investing in gold versus investing in Bitcoins. Now, in the case of gold, gold is a financial, it's a monetary asset like a currency, but it's also a financial asset and an investment. And one of the things about gold is it has multiple utilities for individuals. It is a store of value. It is a means of transactions. You would be tough to transfer $2 million worth of gold instantaneously around the world, because people say, why such a shitty small amount? You know, I mean, gold.
I have plenty to say.
Josh will help you.
But the thing is, when you're talking about gold versus Bitcoin, you've got to start talking, okay, we're talking about currencies. Are these currencies? And let's talk about them as currencies. And gold beats Bitcoin hands down as a currency. And then you have to talk about it as an investment. And if you look at it as an investment and you look at the gold market and you say, wow, okay, the gold market has certain characteristics in terms of size and volatility and trading patterns and things, and where do you find those kinds of characteristics in other markets? You find them in stocks, and you find them in bonds, and you find them in nationally issued currencies. And then you look at Bitcoins or other cryptocurrencies, and you say, it's got certain characteristics in terms of volatility and open interest relative to trading volume and stuff like that. And where do I find similar patterns? You find them in a pachinko parlor. Right? Cryptocurrencies are a gamble made out of whole cloth. And if you know that's what they are, that's great. Gold is a form of currency. It's a monetary asset, it's a financial asset, and it's an investment. And it has, in my tribe, it's 5,000 years of history. Sorry. But it has an enormous history. And I don't care that much about the history. I care about the immediacy. It is much more universally recognized, except with maybe some Plains Native American tribes, most of which the United States subordinated. But so I have to go with gold. But you shortchanged us, because I thought you said we were going to start by talking about who are we and what's our relationship with either gold or cryptocurrencies. And you know, just very briefly, obviously I've been involved in the gold market since the late 1970s as a professional, and I grew up in a family that invested in gold and silver. But in addition to that, in university, I studied international economics. So I'm heavily steeped in currencies and what currencies markets are and what central bankers like to call international currency regimes. And I know that to say the term fiat currency is to say tuna fish, because any currency is a fiat. Even gold is a fiat currency at the end of the day. So I know about currency systems, and I know about blockchain. I happen to have a view about blockchain, which is, I'll give you in a second, and I know about gold. My view about blockchain, as opposed to cryptocurrencies based on blockchain, I have a client who is a computer wizard. Made enough money in his 20s, he sold his company and doesn't have to work ever again. And the way he put it is this: blockchain is like the Wright Flyer, the first plane. Flew one guy lying on his belly with no steering wheel 100 yards. Distributed ledger protocol, which is what blockchain is a fabulous concept that has enormous implications for the history of money and finance worldwide. Blockchain is to distributed ledgers protocol what the Wright brothers flyer is to 727. Blockchain has some problems, some structural issues built into it on purpose, I believe, that render it useless in the long run on a large scale commercial application. It's great for bitcoins and cryptocurrencies because these are minuscule markets. I mean, half a trillion dollars, $500 billion in cryptocurrencies. Gold, $3 trillion, several trillion dollars.
After 5,000 years, only 3 trillion. Wow.
Well,
you know,
mostly-
Jeffrey,
Let's bring Josh
listen, I
into
gotta
this.
tell you, that was a great
All right,
monologue
I gotta
speech you just gave there, but
Okay, go.
we're all in the
I
business
went
of
too
making
long.
money here, and cryptocurrencies have a value and an ability to make money. Who wants to make money in here?
Yeah,
Anyone?
but that's
Are we
money.
all not here to make money? Who wants to make money? Raise your hand, please. Okay.
Who
So
wants
if you
to
want to make
keep the
money,
money after
No,
they
exactly.
made
I was
it?
going to say that's a very different
if
thing.
you
Josh, I
like to
want you
make-
to specifically talk on one thing. Sorry. No, I'm not sorry. Here, this is my job to keep you guys going. What Jeffrey brought up comes up a lot, and I want to hear from the crypto blockchain side, and that is this historical track record of gold.
It's
And
this
if I'm putting my hard
constant
money
fear
into
of
something,
change.
how
It's
I want
this
Josh to
fear of
respond.
change.
Josh, how do you
Yeah.
respond to that? If you're trying to get someone's dollar into Bitcoin instead of gold, how do you respond to the long? We know how gold performs in deflation. It does well. We know how it does in inflation. Does well. We don't know anything about how Bitcoin will perform
so
in the
it's-
extreme
it's-
environment.
it's how it-
Josh, you began in gold. and
Yeah,
now
I'm
you
on
moved
both
to
sides,
Bitcoin.
but
So,
but
like,
but I want to
pick a
explain the
side.
difference. No,
Mom
no,
or
it's
dad?
not about pick a side because there's you probably use Canadian dollars and U.S. dollars
and U.S. and I'm an investor in gold.
So what I think that's different. Again, I get back to the commodity utility that gold can't do. And first off, as far as making a transaction in gold, sending $2 million, our company does that every single day. We do have a MasterCard. You can spend your gold. So first off, we solved that argument. That's not a point anymore.
A commercial, ladies and
against gold. Well, no, I mean, it's a functional utility. But the difference... No, but I want to make the point of what the difference is between what we do. If you think about MasterCard or PayPal or even a paper check, that's not a money technology, that's a communication technology. So that's actually just saying that we're going to settle a ledger here and we're going to settle a ledger here at two different banks. And even so we've got a client in Singapore that could buy gold in Sing dollars, send the title, the value of his gold to his son, who then sold it and redeemed it for Canadian dollars to pay his tuition. The whole thing took 48 hours, which would take probably a week and some pretty uncomfortable exams from the bank to do it with the fiat correspondent banking system. But again, the difference between gold doing that is we didn't physically move the gold, we moved the title on a ledger. What's different with Bitcoin is you're actually moving the bearer value of the asset across the world. I can move $2 million, $2 billion from Albania to Zimbabwe without any banker getting paid in London, without any banker in New York getting paid. And that's a very revolutionary technology. So when I think about gold versus Bitcoin in the case of deflationary environments, what about in the case of a total collapse in the society where you get draconian capital controls and you can't move title or assets around outside of a country? This becomes a very different medium of exchange and store of value than gold.
Not if the controls include computers, because you actually said it yourself. You're not, when you're moving money or gold, you're moving it on a ledger, and a Bitcoin or any cryptocurrency is only a ledger, right? It's a ledger protocol.
But there's a scarcity to use that ledger. You have to pay to use that ledger. It's not a free ride. It's not a free infinite. And you alluded to this before. You said that it's actually slow and it's designed that way. It is. It's designed to be slow because it's designed to be secure. So people only have to pay to use that ledger. And who are they paying? They're paying this massive infrastructure of miners to control that ledger.
Instead of bankers.
Instead of bankers.
So you're
exactly.
criticizing gold and money because you have to pay a banker to move it, and you'd rather pay a bunch of anonymous miners on.
Yes, because I think three of us worked at Goldman Sachs, and we could probably all say that the bankers sometimes cheat. A ledger has a very rigid protocol, and that rigid protocol you can't cheat.
Include. You know what? Let me explain something. There's a lot of big words being
Did
used
we
up
all,
here.
in fact, work for
But
Goldman?
blockchain, for those of you that really want to know what blockchain means, explain it to me like a 5-year-old. A blockchain is a database. If you've used Google Sheets before, ever, it's saving an Excel spreadsheet on the internet. And there's multiple people that are involved in sharing that database. And all you're doing is every time that somebody else goes in that's trusted, that makes a change to that Google Sheet or Excel spreadsheet, and saves it and sends it across to the next person, that's called mining. So all mining is doing is securing the blockchain. The blockchain is a database. This ledger that everyone's talking about, is all it is credits and debits. So people like to complicate it a lot, but really all you're doing is you have now removed, and I don't want to throw anyone under the bus, but if you've ever wired money across the world, you have no idea where it goes after you fax, if you still have a fax these days, your bank. But with blockchain and Bitcoin or crypto or Ethereum, Litecoin, even BitGold, believe it or not, Bitcoin Gold exists. You can send it without a SWIFT intermediary, without a fax, without a banker in the middle, and it gets to Josh or Jeffrey or Sprott even within seconds. And both parties on either end can track it instantaneously. And that's what I think is the epiphany of digital currency, is that forget all the crypto nonsense. It's about the fact that you can now move money instantaneously to anyone in the world, and it happens within seconds. And you can track it, and there's no intermediary like SWIFT in the way that doesn't give you any clarity on your own money.
Thank you.
The reason it's popular is because it's a movement by the people for the people.
Now there are
everyone
some
that's talking shit about it is usually an intermediary that takes a little spice, a little spiff off that transaction.
There is some issue. You can move the money quickly, but once you convert it back into a currency, there's high transaction fees that were not really anticipated, and there's some
I don't
issues
know what
around
you
that.
mean. When I send money to Josh, if I send one Bitcoin to Josh and he converts it at his bank, there's no currency rate loss. There's no purchasing power parity. There's none of those economic issues that we all learned about all these artificial arbitrage walls that have been put up for the past 30, 40, 100 years. So people who are scared of this kind of mobility of money are the ones that are in the middle that are taxing you every time you send money around the world.
Well,
And now various countries, various states in the US are allowing residents to pay their taxes with Bitcoin and other cryptocurrencies. Why? Because even the government doesn't want to pay the intermediary anymore.
No, it's because they want the money.
Fast. Just like your clients deserve at Sprott.
You know,
Immediacy. None of this T+3 bullshit anymore. We want it today. We want it instantaneously. Just like when you call an Uber, you want it there within 5 minutes,
no,
right?
by the way, we will happily accept Bitcoin. Don't get me wrong.
Oh, you just switch over to our side there?
No.
Welcome.
No, I think actually it's interesting. I was described as being to your right, and I suspect the gold guys are always to the right of the Bitcoin guys for various historical reasons. But I don't think that you've necessarily addressed from the point of view of a lot of people the preference between gold and Bitcoin. I don't think that you heard, well, maybe you did hear Jeffrey say that Bitcoin wasn't a lot of fun. But the fact that you had to take 5 or 6 minutes explaining it is something that gold people never have to do. People have a visceral memory of gold. The second point, if I might
I think
finish,
that was Jeffrey with his 5-minute monologue there. I was the one that was 1 minute.
No, that's right. You were 7. I'm old. I don't count well. You know, it takes me a long time.
That's okay. Your kids will explain it to you tonight.
Well, maybe, but from our point of view, you don't have to explain it. It's already been explained. The second thing with regards to Bitcoin, of course, has been the price volatility. And I say,
Absolutely.
And from your point of view, I get it 100%. If you see value in volatility, and there have been points in time in my life, by the way, where being a pawnbroker, I've profited from volatility, I'm all over that. I would suggest that most people, however, are comfortable with upside volatility more than they are downside volatility.
Absolutely.
And from that point of view, when they talk about me, gold versus Bitcoin, I have lots of volatility in the rest of my life. I don't want it in that particular part.
Josh, pick up on the theme of volatility. Is that something that is just in the early phases of cryptocurrencies? Where do you see that going?
So first off, we may have to switch chairs for me to answer this question. But no,
We can do that.
Yeah.
Okay, now I'm pro-Bitcoin.
Now the audience is completely confused.
Welcome
I'm trying to bring clarity to the crowd.
New age.
So volatility is a very important thing, and again, this is the problem as of Bitcoin as money, as a commodity. I think it has a ton of utility as money. You're not looking for a year-over-year upside return as a store of value. So many times, crypto guys are like, "Oh, but gold hasn't done anything." That's what it's supposed to do, is store value. Now, if your metric for valuation as a store of values, it's got to go up 1,000% every year. Yeah, it may go down 3,000 this year, but it's going to go up 8,000 next year. Eventually you run out of people to sell it to keep appreciating those gains. So, and the other problem with volatility of Bitcoin is there's absolutely no supply elasticity. You have a very fixed. We can throw all the energy in the universe at that code, at that protocol. We can't change the supply of Bitcoin, which means it's completely now dependent on the whims of the demand side. So it's always going to be volatile. I do not believe it's going to be less volatile as it scales.
But Josh, you missed the whole point. You missed the whole point. You gold guys are so full of shit. Yeah. Give me my card back. The point of gold, from my point of view, as an anarchist, is that owning gold is unpatriotic. The beauty of Bitcoin is that no government controls it and no government can tax it.
Yeah.
And if you think about gold, if you think about Bitcoin, the only possibility of a tax mechanism is voluntary compliance. You don't have to worry about trusting a government. You don't have to worry about government controls. You don't have to worry about some moron with a gun opening your safe deposit box. Owning gold and paying tax is completely unpatriotic. It's a sin against mankind. The point of government is not to persuade, but rather to compel and force. And feeding the beast, being taxed on your gold, is immoral. Bitcoin gives you the opportunity to be moral and not feed the beast.
Jeffrey, come on in. Come on in on that. I think
Wait, one thing. It's your duty as a citizen to file your taxes. No one's going to force you to do that for you. And whether Sprott or other brokerages report your taxable income is up to Sprott. But ultimately, it depends on you as a good citizen to report your taxes and pay your taxes.
Yes, let me tell
you.
So
there is
was all
no
rhetorical.
regulation or no government that forces anyone to report their taxes. It's your obligation as a citizen. And it's your obligation to build the infrastructure of the country in which you reside and you're a citizen of. So our customers can press one button and they will have their capital gains, and it is their duty to report their taxes and pay their taxes. And now, more and more companies like Coinbase, Einstein, and other exchanges around the world are voluntarily complying.
Whose side are you on?
We voluntarily comply, unlike these guys who have to comply, to make sure that our customers are reporting their taxes and doing their duty. And if they don't, they're the ones that are guilty of tax evasion. Just like they were if they're doing a cash transaction, if they're taking tips as a waiter or waitress, any type of business or any type of income you earn, it's your duty. Even a garage sale, it's your duty to report your taxes. So don't tell us it's our fault that we're out of the government control. In fact, companies like us are calling for regulation and calling for transparency and calling for oversight, because in any market that has potential bad actors and lack of oversight, you will have those bad actors come, and you'll have those bad actors take advantage of it. So it's up to us to compel the industry and those around us and our customers, which number 45,000 within 7 short months of opening, to make sure that they're doing their duty as a citizen and paying their taxes.
Okay, Jeffrey had a point. He wanted to come in. So Jeffrey, come back in. I think it was on volatility.
Jeffrey's still stuck 5,000 years ago
The
trading gold.
conversation seems to gotten off the track that I thought it was supposed to go on, and I'm really perplexed by what.
Well, Jeffrey, I'll ask you a
Well,
question. I own gold and I own gold stocks. Do you own any Bitcoin or Bitcoin stocks?
No.
Why not?
Because I don't gamble.
You don't diversify?
I don't.
You don't have
gamble.
any penny
I'm
stocks in your
very well
portfolio?
I'm very well diversified, but I don't invest in tobacco stocks or Bitcoins. I don't.
Fair
gamble.
enough. Fair enough.
And I'm very perplexed about Rick Rule's religion. I mean, when they say that gold's immoral, that's like that's.
We're going to ask Rick
I
to
think there's a
join our board
healthy
here.
dollop of irony in that
Let's
statement from
get
Rich.
back
just
to
be clear.
what it's gold versus Bitcoin, and I think you mean gold versus cryptocurrencies. And I guess the question.
At the beginning, they actually said Bitcoin, not crypto. They said that.
Oh, they said that.
Yeah, the debate was trying to keep it focused on Bitcoin and gold, but please, Jeffrey, you have the microphone.
I just, I look at gold, and Actually, Josh said something that is actually very importantly inaccurate. He said you can't increase the supply of Bitcoins. And the truth is that you can't increase the supply of Bitcoins under the current rules unless the rule makers change them. Right? That's
That's not actually accurate. You can't increase the supply of Bitcoin, but you can fork the Bitcoin
Right.
code.
Okay.
And it's been
But-
done.
but
Like
now you're practicing Talmudic wisdom here. You know?
no.
You're just splitting things. Okay, this is like
Well, good thing I went to
is
Hebrew
like
school.
a central banker saying, I have a 40% gold backing on my currency, which means I won't issue more gold currency than 2.5 times as much as I have gold in value in my reserves. Unless I want to change the rules, as I did in 1971 in the United States or 1966 in other countries, and say, no, I can issue more currencies. Bitcoins have a limited supply only because somebody has said, let's limit the supply. The supply can be increased or forked or come up with any other euphemism you want. The supply can be increased and the game can be skewed by human activity. Whereas with gold, there is a geologic limit to supply. It's enormous. It's much larger than most people at PDAC know and think, but there is a physical limit to gold supply.
But wasn't the value of gold determined by scarcity value?
No, the value
not.
of gold is determined by people's transactions on an immediate, continual basis. What's the value
And
of gold?
where is that? I don't. How can I
It's
track
every
that?
place
Can
where
Can
gold
you
is
show me a website where I can track the transactions within gold?
Kitco.
Where?
You can
Kitco?
find the value of gold everywhere in the world immediately, and that value is determined by what buyers and sellers are willing to transact at. It has nothing to do with the scarcity value. It has nothing to do with.
And where does one
So
trade?
I'm going to disagree now on this side because I've heard this a couple times now that it's very subjective. I call this the Tinkerbell theory of value, where anything can be valuable if we just believe it has value. I don't believe that at all, and I know that's sort of a tenet of Austrian school economics, which probably a lot of people in gold lean towards. But I actually find that very, very, we were on a panel with a central banker that was, saying that gold we could find a new discovery and it's going to radically change the price of gold, and we're all just going to change our mind and all of a sudden gold's not valuable again. And the quick question is, we've had a price transaction ratio between copper and gold going back, I think, 5,000 years, and it always mean reverts to a very similar ratio. And is it more likely that people are just subjectively having a Tinkerbell theory of value that somehow stayed constant for 5,000 years, or is it more likely that there's something else, some other metric that it's mean reverting around? Our view is that an energy function of scarcity determines value, and so when you look at gold, there's an energy cost to produce it, but then it lasts forever. That is the value of gold. There's nothing else in the periodic table. Let's not talk about economics or stocks or bonds or currencies. You can produce gold and it lasts forever. There's nothing else in the periodic table like that. That is its energy function of scarcity, which defines its value. Now Bitcoin has a similar property in that it takes a tremendous amount of energy to produce, but then it can circulate and transact with only a very small transaction fee forever at any denomination. So again, these are very important concepts in money that I think a lot of the central bankers, there's a lot of hubris in central banking right now. There's not a lot of diversity of thought. They all have one sort of viewpoint that they focus on. But this is, I think, a very important thing, that gold has an objective value in the economy. It's not subjective. It's not a Tinkerbell theory of value.
That's a great topic of debate. Rick, do you want to chime in? Intrinsic value is a big thing when we're talking about currencies. And with the Austrian School of Economics, it did fall out of favor. And it became about confidence in currency, what gives it. So this could be fruitful to dive into a bit if Rick and Jeffrey want to chime in. Does gold is it determined by intrinsic value or by confidence?
Sadly, I've changed my place on the panel, so I need
that's
I need to
true. That's true.
I need to rethink the answer from this particular point of view. I've come to believe that in periods of time which matter to most people, that gold is, in fact, as Jeffrey would suggest, also a faith-based currency. I know from my own point of view as a, well, let's be honest, as a pawnbroker, a lender, which is really what I am, it is easier to work up the courage to be a lender against gold than it is, given the volatility and given the difficulty of holding the collateral, with Bitcoin. So in that sense, certainly, I agree, certainly. The other side of the argument, really, truly, for me, the Bitcoin, the side of the argument that helps me with Bitcoin is the anonymity and as the suggestion that the transaction takes place without intermediaries. I don't have to trust Sprott. I don't have to trust the Royal Bank of Canada. I don't have to trust the U.S. government. All those kinds of things. I understand, I actually do understand the utility of Bitcoin. I just, as a lender, have no earthly idea how to value it.
Well, and that brings us out, and Michael, I want to bring you back in here. Regulation is obviously a huge theme, right? And I'm confused on something that I want clarity on. It seems to me in the earlier days, i.e. just a year ago, that a lot of the arguments around the value of cryptocurrency and Bitcoin seem to be about its freedom from regulation. And now that we have people like Mark Carney, now that regulation is becoming a real thing, a lot of proponents on the crypto side are saying what you said earlier, which is we welcome the regulation. The question being, if Bitcoin ends up being fully regulated by a combination by the SEC or however that plays out, does that not undermine the very reason why it was created in the first place?
Absolutely. And that therein is what we call, there's a great paper on it, I forget the author's name, I apologize, but it's called the government regulation paradox. So you want it to be regulated because more and more Wall Street and Bay Street is getting into Bitcoin. And like you said, Josh, investing hundreds of millions of dollars into great companies that are mining Bitcoin and other cryptocurrencies all around the world. Tremendous infrastructure is being built for the purpose of generating what we call, or what they call, virgin Bitcoins, Bitcoins that have never been used in illicit activities or have never transferred wallets that have been involved in any kind of a criminal activity. So yes, it's a fine line that we have to walk as an exchange, because what we are trying to do is create a simple medium of exchange for our customers and safe. But the very reason why the original libertarians and that movement bought into Bitcoin and other crypto was because of the fact that it was anonymous, or what we refer to as pseudo-anonymous. It's not anonymous in that there's no name attached to the address or the send. But if you remember email, and I mean, I'm old enough to remember when there was no internet, emails used to be like 84 characters long with tons of dots and characters, and now it's just mgokturk. So it's just more of a behavioral shift. But to answer your question, the truth is, Tony, like, unfortunately, there always will be, and in every market, whether it's gold or Bitcoin or diamonds or cash, there will be bad actors, and there are going to be the overwhelming majority that are good actors. And those that welcome regulation do so because they want to protect their customers. They want to ensure that it's a stay economy, that it involves and it grows. And as we've grown from 100 million market cap to $500 million in 7 months, it's because more and more exchanges are becoming pro-regulation, pro-transparency, pro-reporting to the government taxes, and working with law enforcement agencies to ensure that if there are suspicious transactions, that various SARs are being filed, and you're cooperating with every agency to make sure that you progress the market. And that's the most important thing here. It's not like gold has never been used in illicit activities, and it's not like it's
or
never
US
stopped.
dollars.
Or US, thank you, Rick, not US dollars. I'm kind of confused as to your position right now. But the whole point is, those who call for regulation and those who ask and cooperate, and my favorite word of all my startups has been collaborate. This whole word of disruption, people love it in Silicon Valley. I can't stand that word. Collaborate. Work with the banks. Work with Sprott. Try to work with their customers so that Sprott can get their money faster and their customers can get their money faster. It's all a behavioral shift, and there needs to be a movement, just like there is with the Blockchain Alliance of Canada, Blockchain Alliance, There's various regulatory agencies, there's coin center advocacy groups that are all pushing and lobbying government in Canada, the US, and all over the world for transparency, openness, and regulation. We're welcoming regulation in the interest of moving this market forward. That's all it is.
Well, that's great.
And if they don't want to be regulated, certain people, they can go to those black market websites or exchanges or whatever. But the best will always call for regulation because they want to move the market forward.
The fear being that those players that aren't as legitimate as you are, could they undermine the entire system? But I want to push it over to Josh.
Sure, but they can undermine the stock exchange as well. I mean, and they do.
Fair point. Fair point. There's a great quote. Well, certain people on this panel might not think it's great, but it got a lot of media play. So I want to get some responses to it. And we can't have this without mentioning Jamie Dimon, because he did CEO of JP Morgan. And the quote is, as most of you probably know, Jamie Dimon is a big bear on cryptocurrencies. And the line was, Bitcoin is a great product for Venezuela, North Korea, Cuba, and criminals. Can we have some responses to that? Josh, is that a fair comment?
Again, it's really hard where I'm sitting. Like I kind of feel like I need to switch again because he's in a very powerful position and he gets to borrow everybody's float here. You pay him to give him your money, and then he gets to go make infinite money. And when something goes wrong, gets to print more of it. So he has a really good position to call it a fraud. When he's running probably the largest fraud on the planet.
I remember that quote. If I may, I know I'm talking a lot here, but the same day Jamie made that quote, and I call him Jamie, there was a blockchain conference in his San Francisco office. Look it up if you think I'm lying to you. There was a blockchain conference at JP Morgan Chase's San Francisco office while he was calling Bitcoin a fraud. And the fact is, if you remember economics again, the reserve requirement ratio, you go to Chase Bank and you put $1 in, they can lend out $9. If we all ran to Chase Bank...
And they don't pay you for it anymore.
And if we all ran to Chase Bank today, if there was a big run in the bank, do you honestly, for 1 second, think they could cash everyone out? Anyone? Just one hand saying yes, they'll have enough money to cash everyone out. They don't, and you know it. But Bitcoin, because of that scarcity value, because there's a certain limited supply, and because we can't create fake Bitcoin, like they do fake fiat, you pick Bitcoin or gold.
And there's developing a very interesting sort of game theory, even in the Wall Street banks, which is very interesting. I had a conversation with another major C-suite executive of Wall Street Bank, and he basically said, I want to get into Bitcoin because Jamie Dimon doesn't want to. So I think and I think that's going to happen on the government level. It's going to create a very interesting dynamic where some countries see it as an industrial boon and want to attract capital and want to attract new crypto wealth. Regardless of where you fall between this debate, again, I'm being the peacemaker here, but which is exactly what we don't want. But it's teaching people about money again. And I think if we look back at this period of time, the most important thing that's going to happen, we're not going to talk about Facebook, we're not going to talk about net neutrality or even some of the things that were the thing we're going to talk about is this is the time period where people were talking about money again. And I think that's an extremely important thing that Bitcoin's done no matter what happens.
It's hard to argue with that. Jeffrey, you signaled me that you had a point to make. Come on in.
I think I was just winking at you.
Oh, thank you.
I always get concerned. One of the worst aspects of my job is defending banks, especially Goldman Sachs. I've spent my life as a critic of a lot of issues related to banking and banking regulation. And when I hear people say, oh yeah, Bitcoins must be good because bankers are interested in it, I remember a statement from the former CEO of Merrill Lynch in late 2008, early 2009, after he had destroyed his company by being in collateralized mortgage obligations. And somebody said to him, why did Merrill Lynch get into them? And he said, we knew they were garbage, but if we wanted to be a brokerage house, we had to be in the game. And that's where we are with Bitcoins and cryptocurrencies. And to say, well, these things must be legitimate because banks and bankers are getting involved is like saying that prostitution must be legitimate because there are pimps involved. I mean, it just doesn't make sense to me,
Giving pimps a bad name comparing them to bankers, you know.
The pimps are outraged right now, yes.
You'd be surprised, Jeffrey, there's a lot of prostitutes that accept Bitcoin these days.
You would know, I wouldn't.
I wouldn't know. We have stricter AML and KYC policies than your company does.
Yeah, so, you know, I'm always hesitant about that. I mean, just the fact that bankers say that this is something that they want.
The bankers aren't saying that one bit. I don't know what banker you're talking about, and if you have a banker that's willing to bank us, please let me know,
There are a
because
lot of banks
it is
that-
TD shut off credit cards for cryptocurrency purchases. I'm a TD customer. BMO, the sponsor here, shut down credit cards for purchases for Bitcoin, and Chase did it as well.
Why did they do
But
it?
one of the things that I
And the reason they did it, Jeffrey, I'll answer your question before everyone else jumps in here, is because just like you can't buy stocks on a credit card, you shouldn't be able to buy Bitcoin on a credit card either. It is an asset
what was
class.
the reason
No,
they
no,
gave?
that's
Was it
that's
volatility?
totally wrong, because I'm pretty sure the avocado toast doesn't create a return either. This is consumer debt, and you pay an interest rate for consumer debt. So I think it was actually very inaccurate that they're saying, oh, we're worried about people getting into credit problems for spending it. They just don't want people in crypto. And they're making this excuse that it's because people are running up big debts. Again, if I use my credit card on Amazon, I'm not expecting to make a return on investment. It's consumer credit. So, and this ties into another point that I think it is important when, you know, we're having a lot of debates about, you know, and particularly in money, it ends up getting philosophical. But there's also a scoreboard for these debates. It's called the market price. One of the things, I was, again, on a panel with a central banker, and again, they want to talk theory, and we're going to probably talk a lot of theory, and often the debate will get Bitcoin versus gold in theory. And I looked at the central banker and I said, you know what? There's a scoreboard. If you want people to use your product, make a better product, because right now gold is winning, and gold always wins. And I think that's the thing, is 100% of fiat currencies have always failed. I still think that Bitcoin likely will fail as that on that scoreboard, but right now it's winning. So this is going to be a very thing, you have to listen to the market and not just the theoretical.
And there's another big issue that we need to get into, Michael, and everyone here, and that is the whole energy side of things. I mean, there is, for some people, there seems to be a bit of a paradox or hypocrisy that many of the millennials that call gold investors dinosaurs also really are concerned about the environment, and yet we know that the stats that I saw, that currently the amount of energy it takes to mine Bitcoins is equal to the amount of energy consumption in Nigeria in a year, and if it continues on pace, it'll be at what Japan consumes in a year. So that's a serious, serious concern. What are we seeing? Is there technologies, is there advances that way with other cryptocurrencies that are alleviating that problem?
I don't know about the hyperbolic comments around Nigeria and all that stuff. I do know that there is a lot of energy being used, absolutely. There currently, as of yesterday, there was enough energy being used in mining Bitcoin alone, not the other 1,500 cryptocurrencies, to power 2.5 million homes. But what you're seeing in that kind of development and energy consumption is a whole new market and intellectual capital kind of coming and rising up with that tide. So as you become more aware of the energy consumption, just like in any industry, those that want to maximize profit and minimize costs will be the ones that think of alternative energy ways. And like in Hive mining, for instance, Hive blockchain uses solar, uses wind. There's another mining company in Mongolia, the upper belt of Mongolia, that uses the wind farms to mine Bitcoin as well. So what you'll always see in any market, when you want to, in a capitalistic market, when you want to reduce the costs of producing, whether it's gold or diamonds or Bitcoin, is a race and an innovative launch and an innovative push to find alternative ways to create Bitcoin or any commodity at a lower cost, with some innovation buried in. So what you'll see is, just like wind farms are being used right now for energy in California, you're seeing the same thing being used for Bitcoin. So you're absolutely right. There is a lot of energy being consumed, but it's a lot cleaner and a lot safer than the energy that's being used to mine and completely destroy the earth to mine gold. And the human lives that are lost in mining gold, I don't think I've heard of one person being killed mining Bitcoin.
Rick, I think you wanted to chime in.
How many slaves are being used to mine gold right now? How many people have died over 5,000 years mining gold?
And every agriculture, actually, more people die in agriculture than mining.
Yeah,
die,
but Josh,
right?
this
And
is
we all
not
have to
about
eat.
agriculture
No,
and
that-
Bitcoin.
it's
This
about
is about
no,
Bitcoin
it's
and gold. Let's stick to the topic
It's
here.
absolutely about what is the energy use versus what is the utility. That is literally the definition of economics, is what is the energy use versus the utility. And right now,
You know
Bitcoin,
what? The Americans
Bitcoin,
didn't send a man to the moon for utility purposes. They sent it because they said it wasn't possible, and they learned so
well,
much
they
from
probably
it.
got the checks from
amount
the
of
government
physics,
because they're in the middle of a
rocket
Cold War.
science,
But-
chemistry,
No,
everything
but it's
that was
what is the
learned
utility?
on
And
that
right now,
expedition.
the
Okay,
utility of Bitcoin.
let Josh make his
measure-
point.
if
Let
you
Josh-
measure-
Right now, the
if-
utility
Let Josh
of
make his point.
Bitcoin,
Let Josh
it's
make his point.
uncertain if it's worth the energy. This is going to be the great thing about Bitcoin. It's still an experiment. It's absolutely in its experiment phase. Was the energy that's used to create it, is it worth it? Now gold, we know that it's worth it. And if you look at all of the uses for gold, and it's not just money, look at electronics. Why do we have to have gold at every connection in a transistor? Because it doesn't decay like copper. It lasts forever. Why do we make our jewelry out of gold? And no, it's not because it's shiny. We make it because if we want to remember a memory, if we want something that to last forever, there's only four useful elements in the periodic table that last forever. Gold was chosen. It's the same reason why we use it in dentistry. It's the physics that provide utility, and it has an energy cost. We don't know yet if Bitcoin is going to last that test of time, whether the energy is worth its utility. That's something that I would say we need to be careful to see what happens, 5-10 years from now.
Okay, Rick, come in. You wanted to say something on energy.
Only very briefly. I think that the fact that Bitcoin and crypto mining has consumed so much energy does go to utility. People have found utility in it, and they found it profitable to use energy in that regard. And I think that decisions as to energy use are up to individual people. It's demonstrated its utility. That's how it's been able to buy the energy. I mean, this is real simple stuff. In fairness, no government had to subsidize the purchase of energy for crypto miners. Now, I have a very different view of the role of government than my newfound crypto colleague. But the fact is that the reason that crypto energy consumption has risen so dramatically is because it has been a user of energy that has generated utility or perceived utility. And the fact that the business has grown that fast, remember now I'm a Bitcoin defender, really is a function of at least real or perceived utility. I think the energy thing is a non-issue. If you, to ameliorate my Canadian friend to the extent that we used energy for some other purpose, it could be good or bad. But the truth is that we used it for something that there was demand for, which is an argument in its favor.
Okay, thank you. We're kind of starting to round down a little bit, but Jeffrey, I wanted to bring it back to you. Do you have some closing comments there? Do you want to bring out to the crowd?
Yeah, a few things. First off, don't blame the millennials, because you have fewer than 1 million people being involved in Bitcoins globally right now. I mean, this is a small market, so don't blame however billions of millennials are around there. It's just that few bad seeds. The second thing is about the energy consumption, and that goes back to something that Josh and I were alluding to earlier. Bitcoins and blockchain were devised to be extremely expensive in terms of energy consumption and computing power. That was their idea of a way to have a distributed ledger protocol that was somewhat more impermeable to hackers and bad actors. Now, that said, let's stop here and say one thing. SWIFT has been around for 40 years. The incidence of hacking into SWIFT accounts is something in the order of 100,000ths of a percentage of the money being transacted on SWIFT. Cryptos have been around for a couple years, and the incidence of hacking is 0.1%. Right? So this is not your foolproof lockbox. You know, this is a thing.
Jeffrey, I've heard this argument before. You know what? If we stopped flying because of plane crashes, we'd never have made it better. You know, when I was growing up, my seatbelt was my dad doing this to me.
Yeah,
you know,
that's
like it's
the kind of
always
thing you
about
say
we have
when
to
you
have
land.
incidents of failure in order to correct. The only way we'll learn anything as human society will progress is through our mistakes.
I'm never on CNBC anymore because I said I'll gladly be on there if you want to talk to me, but if you want to have 5 people talking over me, I won't be there. So they said, okay, go by. In terms of the energy, again, as I was saying earlier, distributed ledger protocol is the thing that's going to radically change the world. And we will have digital currencies, and they will probably be national government issued digital currencies. And they'll have a different digital ledger protocol than blockchain, because blockchain based its security on the energy and computing capacity required. And that means it's not scalable. Okay, you've got $500 billion or $500 billion worth of cryptocurrencies out there, and you've got a multi-quadrillion-dollar economy. You've got $70 trillion in equities alone, and then you've got probably 100 times that in equity derivatives. You know, you have an enormous market that simply cannot go with the blockchain because of the energy and computing capacity. There are other ways to develop a distributed ledger protocol, which will come along the same way as 727 came along after the Wilbur Wright's first plane. It's going to take a long time. I have no idea what it is, and most of the people who are working on it have no idea what it is. But there are ways to have a distributed ledger protocol where multiple people across the thing anonymously validate blocks of transactions without using all that energy. This is like in 1803, the first internal combustion engine was created. It burnt hydrogen. 53 years before commercial production of petroleum came along. So when they created the internal combustion engine, somebody said, holy shit, this is going to change the world. Right? And then they said, now where do we get this hydrogen and how do we safely use it? And someone else came along and said, well, we're going to have to go out and discover what petroleum is. And we're going to have to discover how, decide, you know, how to produce it. And they did it. So I think that there is a great future for digital currencies. Probably not Bitcoins and probably not blockchains.
Okay, let's leave it there on that strong point. Let's open it up to the audience. I know, Rand, we don't have much time. Do you want to chime in quickly?
I've got a client meeting, so ladies and gentlemen,
Okay.
fellow panelists, thank you very much. I have to get back to the real world.
Okay, thank you, Rick. Do we have any questions from the audience? If I can hold on to my other panelists just to give the audience a chance. There was a lot there to digest. All right, you guys look clear. Thank you so much.
And at Gold Money, you can buy gold or Bitcoin. Gotta get the plug in.